I remember the night I nearly lost everything. The clock struck past midnight, ticker tape still rolling in my mind long after the exchange had closed. My account was bleeding red, and my hands trembled on the edge of the desk. It wasn't the money that terrified me. It was the realization that I had no control. I had traded on impulse, on hope, on the illusion that I was smarter than the market. And in that moment, staring at the wreckage of my capital, I swore I would never gamble again. That was the night I became a speculator, not a gambler. People think my fortune was built on daring hunches or luck. They're wrong. My fortune was built on questions, for questions that became my unshakable code. Every trade I ever made, every campaign I ever fought, began with those questions. They were my armor against fear, my shield against greed, my compass in the chaos. And I'll tell you right now, they're the difference between traders who survive and traders who vanish. See, the market is a ruthless psychologist. It punishes impatience, greed, and arrogance with brutal precision. You think you're in control, then the market snaps its fingers and you realize you were never the master, only the prey. That was me in my early days. Chasing tops, buying bottoms, trading noise, burning capital. Until I finally carved these 4 questions into my soul. Let's start with the first one. What is the trend of the market? Sounds simple, doesn't it? But don't let that fool you. This question was my lifeline. The easiest way to go broke is to fight the trend. I've watched men try to short a roaring bull market swearing, "It can't go higher." They picked tops, added to losing positions, and prayed for a collapse. They didn't just lose money. They lost their nerve, their confidence, their very identity as traders. I know, because I did it myself. I once shorted a bull market 5 separate times, each time convinced the top was in. Each time the market squeezed me like a rag, until I had nothing left but frustration. Then, 2 weeks later, the market collapsed, without me on board. That loss wasn't measured in dollars. It was measured in years of discipline I had to rebuild. From that day I made a vow. Never fight the current. If the market is rising, I ride with it. If it's falling, I press the short side. Nothing else. Because here's the truth. The big money is never made in the wiggles, it's made in the waves. You don't get rich scalping nervous fluctuations. You get rich by aligning yourself with the great sweeping trend and holding your ground. That was the first question. But even if you know the trend, even if you've spotted the great wave, you're not ready. Because the second question is the one that destroys more traders than any other. Is this the right time to act? And let me tell you, timing has no mercy. Timing is the graveyard of speculators. You can be right about the trend, dead right, and still lose everything if you're wrong about when to act. I learned this the hard way in cotton. I knew the fundamentals, the supply shortage, the credit conditions. It all screamed bull market. I couldn't resist. I plunged in, bought big, and waited for the advance. But the market just drifted sideways, chewing up my capital like a slow bleed. I cut the position, furious at my own impatience. 2 days later, the real bull move erupted, without me on board. The profit that should have been mine went to someone else, someone who had the patience to wait for the market signal instead of forcing it. That night, I sat at my desk and carved this lesson into my heart. The market doesn't reward anticipation. It rewards confirmation. So I created my second question. Is this the right time to act? For me, that meant waiting for what I called the pivotal point. A price level where, if crossed, the market itself was confirming my thesis. I wasn't buying just because I thought it was a bull market. I was waiting for the market to show me, in its own language of price and volume, that the real move had begun. That's where most traders fail. They're not patient enough. They confuse movement with opportunity. They want to trade every day, every tick, every flicker. But the truth? A speculator makes his fortune not by being constantly active, but by being strategically selective. I'd often sit on my hands for weeks, sometimes months, doing nothing while others were frantically trading. And yes, the silence burned inside me. I felt the itch, the hunger. I'd see stocks jump and think, am I missing out? But the discipline to wait, that was my weapon. Because when the market finally reached my pivotal point, I moved in with conviction. knowing the probability was on my side. That patience was the difference between bleeding capital and building an empire. But listen carefully. Patience without preparation is just idleness. When I was waiting, I wasn't idle. I was studying the leaders, watching volume, charting resistance levels, stalking the pivotal point like a hunter stalking prey. And when the prey finally stepped into range, I pulled the trigger. That was my second question answered. The trend was in my favor, and the timing was confirmed. But before I ever placed a trade, I forced myself to answer the third question. The one that separates amateurs from professionals. What is my risk? Because no matter how perfect a setup looks, no matter how sure you feel, the market can and will prove you wrong. And if you don't know how much you're willing to lose before you start, the market will decide for you. And it will take more than you can bear. Risk. That word has broken more traders than bad analysis ever could. I've watched men stare at a screen, their losses climbing tick by tick, sweat dripping down their temples, whispering to themselves, "It'll come back, just a little longer." But the market doesn't forgive hope. It punishes it. And when that punishment comes, it's swift, merciless, and permanent. I know, because I've been that man. There was a time when I bought steel, convinced the rally would continue. At first, it looked promising. But then the price dipped. Temporary reaction, I told myself. I held. The dip grew into a slide. I convinced myself again. The fundamentals are strong. I added more. The slide became a collapse. By the time I finally admitted I was wrong, my account was wrecked. That disaster taught me a brutal truth. You cannot control how much you'll win, but you can always control how much you'll lose. So I made my third question sacred. What is my risk? Before I entered any trade, I defined the exact point where I'd be proven wrong. A single price. No debate. No bargaining. If the stock touched that line, I was out. No hesitation, no pride. That was my stop-loss, and it became my lifeline. Amateurs hate this. They dream only of profits. They don't want to imagine losing. So they step into the market blind, without a retreat plan. And when the market turns against them, they're paralyzed, frozen between fear and hope, unable to act. That paralysis is fatal. I refuse to live like that again. By defining my risk in advance, I bought myself freedom. The decision to take a loss wasn't emotional anymore. It was mechanical. A rule, not a plea. That meant I could sleep at night, because I knew my worst-case scenario. Losses stopped being catastrophes. They became business expenses. Small, manageable, calculated costs of doing business in the market. And here's the irony. By respecting my losses, I gave myself the chance to hold on to my wins. I used to say, a loss never bothers me after I take it. I forget it overnight. But being wrong and not taking the loss, that's what destroys both the pocketbook and the soul. If you don't answer this third question honestly, you'll never survive long enough to reach success. The market will strip you bare, not because you didn't know what to buy, but because you didn't know when to surrender. And once you've defined your risk, you're ready for the final question. The one that transforms a single trade into a campaign. How will I manage the trade? Because entering is only the beginning. The real test begins once you're in the position, when your money is exposed and your emotions are on trial. Trade management. This is where the amateurs collapse, even after getting the first 3 steps right. I've seen it countless times. A trader nails the trend, times his entry perfectly, and even sets a stop-loss. Then the position goes in his favor, and what does he do? He panics. He grabs the profit at the first uptick, terrified it might vanish. Or worse, he sits frozen, watching his winner reverse because he never had a plan to exit. That's why my fourth question became law. How will I manage the trade? Before I entered, I had already decided how I would handle success and how I would handle failure. No guessing, no improvising. When the trade moved against me, my stop-loss was final. No negotiation. That rule preserved my fortune more times than I can count. But when the trade went in my favor, that's when the real magic began. I didn't just sit and smile at a small profit. I pressed the advantage. I pyramid. Here's how. My first position was always small, just a probe. If it immediately showed a profit, I added more. And if the trend confirmed itself further, I added again. Each new commitment was larger than the last, financed by the profits of the earlier ones. I was building a fortress, brick by brick, but with the market paying for the construction. This wasn't reckless doubling down. It was scientific scaling. The market itself had to earn my trust before I committed in size. That's why when I caught a great swing, a real wave, I rode it with size big enough to make a fortune. But I didn't pyramid blindly. I also knew when to leave. My exit plan was written before I ever bought the first share. I watched for two things: a rally that failed to materialize after a reaction, a break of a reversal pivotal point. Those were my signals that the move was over, the current had shifted. When they appeared, I didn't argue, I acted. I sold, locked in the gains, and walked away with my nerve intact. This discipline meant I was never a hostage to my emotions inside a trade. I wasn't asking myself, what should I do now? I already knew. I had rules. The rules commanded me, not my fear or my greed. And that's what most traders don't understand. The market isn't really about money. It's about psychology. It's about whether you can command yourself under pressure, whether you can sit tight when the profits are climbing, whether you can cut deep when the losses are screaming, whether you can act when every fiber of your being is begging you to freeze. That's why these 4 questions, trend, timing, risk, and management, aren't just trading tactics. They're a mental framework. They're how I turn speculation into a profession, instead of a roulette wheel. But don't think I invented them overnight. They were written in the ink of my own blood, in the ruins of my own failures. Every scar I carried in this business was carved by ignoring one of those 4 questions. I remember one of my darkest failures. I had been on a hot streak. Every trade seemed to go my way. My confidence swelled into arrogance. I told myself, I know the market. I don't need the checklist this time. So I jumped into a position without waiting for confirmation, without setting a stop, without a management plan. At first, it went in my favor. I felt invincible. Then the reversal came. The stock dipped. I told myself it was just noise. It dipped again. I told myself the fundamentals were strong. By the time I admitted I was wrong, my profits were gone and my capital was crippled. That loss wasn't just financial. It was psychological. It humbled me. It forced me to confront the truth. The market doesn't punish mistakes, it punishes arrogance. And here's the hardest truth of all. Discipline isn't something you conquer once. It's a battle you fight every single day. Every morning when the market opens, greed whispers, fear whispers, impatience whispers. The checklist is the only shield you have against those voices. People ask me, what's the most important skill for a trader? They expect me to say chart reading or market analysis. But the real answer is self-mastery. Without it, even the best analysis will fail. With it, even an average system can succeed. That's why I treated trading as a mirror. The market showed me my own weaknesses more clearly than any diary or confession ever could. My impatience cost me fortunes. My stubbornness cost me more. My ego nearly destroyed me. But each failure, if I was honest enough to study it, became a stepping stone. I want you to feel this as more than theory. Picture this. You're in a winning trade. The price climbs higher and higher, your profit ballooning. Then it wobbles. Fear strikes. What if it collapses now? You sell too early, and watch the stock double without you. That fear just cost you a fortune. Or picture the opposite. You're in a losing trade. The price drips lower, your account bleeding. Pride whispers, it'll come back. Just a little longer. You hold, refusing to take the loss. The stock collapses and you're ruined. That pride just cost you your career. Both fear and pride are assassins. The checklist is the bodyguard. Trend, timing, risk, management. Those aren't just trading rules, they're psychological weapons. They protect you from the deadliest enemy you'll ever face in the market, yourself. And here's the irony. The longer you trade, the more you realize. The market doesn't change. The same cycles of greed and fear play out generation after generation. What changes is whether you have the courage to discipline yourself while others lose theirs. That's what creates legends. The hardest lesson I ever learned was this. Money is made not in the buying or the selling, but in the waiting. Most traders can pull the trigger. Most can close a trade. But very few can sit, calmly, confidently, while the market swings and sways. Waiting feels like doing nothing, but in truth, it is everything. I remember one campaign that changed me forever. I had studied the market for weeks, watching the tide shift in subtle ways. I knew the moment was coming. But instead of jumping in, I sat on my hands. I waited for the market to confirm me, not for me to force my will on it. Days passed. Other traders mocked me. They said, "Livermore's lost his edge. He's scared." But I kept waiting. Then, one morning, the stock broke through its pivotal point with such force it was like the starting gun of a race. That was my signal. I entered with size. And then, I waited again. The stock soared. The impatient traders had already cashed out with crumbs, but I stayed put. My checklist gave me the discipline to sit tight, to resist the temptation of quick profits. By the time I exited, I had captured the kind of move that makes careers. That's when I understood. Impatience is the silent thief of fortunes. Let me give you another story. I once met a young trader who reminded me of myself at the beginning. Bright eyes, fast hands, full of ambition. He wanted to trade every flicker, every tick. He thought movement meant opportunity. And for a while, he made small wins. But slowly, the losses ate him alive. His energy was spent, his capital drained, his spirit crushed. I told him, "You're not losing to the market, you're losing to your need to act. The market pays the man who can wait." And that's true in life as much as in trading. We rush into decisions, we chase instant gratification, we panic when things don't move fast enough. But discipline is the art of patience. Whether in markets or in personal growth, the greatest victories belong to those who can endure the waiting without breaking. Think of it this way. When you plant a seed, you don't dig it up every day to see if it's growing. You water it, you protect it, and you wait. Trading is no different. You prepare, you plan, and then you sit tight until the market tells you it's time. Now here's the paradox. Sitting tight isn't passive. It takes more energy to wait with discipline than to act in haste. Every fiber of your being will scream, "Do something." And that's when you must hold your ground. Because in that stillness lies the power that separates professionals from amateurs. Remember this line, because it will save you. It's not about how often you act, it's about how right you are when you act. One of the greatest truths I discovered in speculation is this. A winning position is the only position worth adding to. Most traders do the opposite. They feed their losers, hoping to average down and escape with dignity. But dignity won't pay your bills. All averaging down does is chain you to a sinking ship. I learned early, sometimes painfully, that when a trade moves against you, the market is sending you a message. It's telling you, "You are wrong." My job was never to argue. My job was to listen. That's why I developed the practice of pyramiding. Not mindlessly, not recklessly, but strategically. When the market confirmed my judgment by moving in my favor, I didn't just sit there smiling at paper profits. I pressed the advantage. Picture this. You're in a trade, and the price surges past your entry. Most traders feel relief, maybe excitement. But me? I felt opportunity. That was the market saying, "You were right." So I'd add another layer to my position. Carefully, always with a stop beneath me. And if it kept rising, I'd add again. Step by step, like climbing a staircase. This is how great fortunes are built. Not by scattering small bets, but by focusing on the few trades where the market itself proves you right, and then pressing hard when you have the edge. But here's the catch. Pyramiding isn't about greed. It's about discipline. You don't just add because you feel like it. You add because the market has already shown strength, and you're riding with it. Every new position must pay for itself quickly, or it's cut without hesitation. I remember one campaign in particular. The market had aligned perfectly with my analysis. The timing was right, the breakout decisive. I entered. Then, as the move accelerated, I built my pyramid, one block at a time. Traders watching me thought I was insane. Why risk more when you're already winning? They asked. But that's the difference between a gambler and a speculator. A gambler spreads risk across uncertainty. A speculator concentrates risk only where certainty is growing. By the time the campaign ended, the profit was so immense it changed the trajectory of my entire career. Now compare that to the novice who adds to losers. I've seen it 1,000 times. The stock drops, they buy more, telling themselves they're lowering their average. The stock drops again, they buy again. Soon they're trapped, praying for a bounce that never comes. That's not speculation, that's slow-motion suicide. Remember this rule. Never average down. Always pyramid up. Because in trading, just like in life, strength attracts strength. Winners open the door to bigger wins, but losers drag you into the abyss. So when you find yourself on the right side of a powerful move, don't sit timidly. Step forward. Press your advantage. Build the pyramid. That's how empires are made in this game. Let me tell you something most traders never want to admit. Getting into a trade is the easy part. Getting out is the real battle. I've seen men watch fortunes evaporate because they didn't know when to sell. Their analysis was good, their entry was sharp, but their exit? A disaster. They stayed too long, or they left too soon, all because emotions clouded their judgment. For me, the exit was always guided by one principle. The market is never wrong. When the market told me the move was over, I didn't argue. I sold. Here's how I knew. During a campaign, I would study every swing, every surge, every correction. As long as the trend stayed intact, I sat tight. But the moment the character of the move changed, the moment the rhythm faltered, I knew the tide was turning. I remember riding one stock during a roaring bull move. It climbed relentlessly, day after day, carrying my pyramid higher and higher. Then, one morning, the tape told me a different story. The buying had lost its urgency. The rallies were weak, the pullbacks deeper. It was subtle, but unmistakable. The campaign was ending. So I sold. Not because I was scared. Not because I wanted to lock in profits. I sold because the market itself had changed its tone. Within weeks, that stock collapsed, dragging down the overconfident traders who had overstayed their welcome. That's the cruel trick of the market. It lures you with profits, then whispers in your ear. Hold on a little longer. Don't miss the last move. But that last move is the most expensive of all, because it wipes out months of gains in days. Exiting isn't about perfection. You'll never sell at the exact top, and you shouldn't try. Chasing tops is gambling. Exiting is about preservation. It's about leaving the party while the music is still playing, instead of waiting to be thrown out with the drunks at dawn. Think of it like this. Every trade is a campaign, not a marriage. You don't pledge eternal loyalty to a stock. You march with it as long as it's advancing, and the moment it falters, you retreat with discipline. That's how generals win wars, not by clinging to lost ground, but by preserving their forces for the next battle. And here's the bitter pill. Selling often feels wrong. When you take a profit, greed whispers, you could have made more. When you take a loss, pride sneers, you should have waited. But trading isn't about feeling good, it's about surviving and thriving. I survived because I learned to sell without hesitation. That single discipline saved me from ruin more times than I can count. So remember this rule. Buying makes you money, but selling keeps you in the game.
In the end, trading taught me something bigger than money. It taught me about myself. The market was never my enemy. It was my teacher, stern, unyielding but fair. It exposed every weakness I tried to hide. My impatience, my pride, my greed. And it rewarded every strength I fought to build. My discipline, my patience, my courage. That's why I say this. Trading is the most honest mirror a man will ever face. The numbers don't lie. Your account balance will tell you the truth about your habits, your impulses, your discipline. If you're reckless, it will show. If you're timid, it will show. If you're disciplined, patient and focused, it will show. And here's the great paradox. The profits are just the byproduct. The real prize is who you become in the process. Every battle with fear, every confrontation with pride, every test of patience shapes you. The markets forge character, or they destroy it. I've known traders who made fortunes but lost themselves to arrogance. I've also known traders who found peace and clarity, even if they never became legends. The difference was never the market. The difference was always the man. So when you sit down to trade, don't just ask, "How much can I make?" Ask, "Who am I becoming in this process?" Are you the trader who cuts losses without hesitation? Or the one who clings to hope? Are you the trader who waits for the right moment? Or the one who chases every flicker? Are you the trader who adds to strength? Or the one who nurses weakness? The answers to those questions don't just define your results, they define your destiny. I'll leave you with this. Every great move I ever caught, every fortune I ever built, came from 4 simple questions. What is the trend? Is this the right time? What is my risk? How will I manage this trade? Those questions were my compass in the chaos. They were my discipline when emotions raged. They were my edge when the crowd lost theirs. And if you make them your compass too, you won't just trade better, you'll live better. Because discipline, patience, and courage don't just belong in the markets. They belong in every corner of life. So I ask you right now, today, not tomorrow, will you step into the market as another reckless gambler chasing noise? Or will you walk in as a disciplined speculator, armed with patience, clarity, and courage? The market doesn't care. But your future self will. And if you choose discipline, I promise you this. Someday you'll look back on your journey, not just the money earned, but the man or woman you became, and you'll realize the real victory wasn't the fortune. It was the transformation. That is the greatest trade you'll ever make.